To ACV auctions, talk about this here. I put an investment in for client portfolios a few weeks ago. Not because of this information, but it certainly helps now that I have this information as of this week. We bought this stock. I was looking into Advanced Auto Parts. For those of you guys new here, earlier this year, I was looking at Advanced Auto Parts. The stock was down pretty bad. I wanted to understand why it was down bad. And I started to dive into the auto industry again and was trying to figure out, okay, look, Advanced Auto Parts, let's kind of pull up the chart here. For those of you who knew, this was an issue, by the way, of their old management. Their old management was terrible. They did it, I mean, just, again, they killed the company. They got new management that are fixed things, and it caused this discrepancy. Okay, so my thought was, and that we got out of most of our position. I owned a very small piece left. I talked about it last week. My thought was, okay, look, if these guys are going to turn around, what's the likelihood or what's the data show for cars that have been on the road for 10 years, 15 years that are going to need parts? Okay. 2 weeks ago, I didn't think it was that high. But 2 weeks ago, 3 weeks ago, I found ACV auctions, and that got me to this particular point. Okay. So I own a position in ACV auctions. Again, this is not investment advice. If you're an accredited investor and you're interested in the long short equity approach that we use that I've talked about in this show, go to the money management tab here on thelongvol.com. Even if you're not accredited and you're looking at wealth management stuff, there's stuff for you there as well. But you have to be accredited for a long short equity strategy. Okay, not investment advice. We own this position. I looked at this company and I go, this is interesting to me. Number one, because they were losing money hand over fist. Again, they're relatively new in the IPO, but something suddenly had changed on them. Okay, they caught my attention. Their earnings, and I'm going to go to some earnings number here. Their revenue growth year over year was up 44%. Okay. It was $171 million. Now, again, there's things that happen when that happens. So you got to go look at it and say, well, again, is it accounting tricks? I mean, what's going on? Okay. So they've been doing extremely well in their auction business. They own 4 different business arms. They own an auction business, ACV Transportation, ACV Capital, and something called Clear Car Brand. They also own something called 360 as well. Their transportation business has also done well. And this is the original owner. You can't see it if you're on Spotify. This guy's name, or one of the co-founders, excuse me, Jack Greco. He talks about in 5 minutes what he did. I think he exited the business when they IPO'd. A private equity firm bought them, by the way, and they IPO'd the company. But he talks about the auction business a bit, okay? Now, when I was going through this, initially I go, these guys are just an auction company. Now, if you go look at the data here, it says diversified revenue streams. This is directly from their earnings report on their website. You can access this too. It's not MNPI. The marketplace services, transportation and capital, was up 39% year over year. Okay. So when they go to these small wholesale dealers, and there's videos on YouTube, you can type in ACV auctions, and some of these guys will literally, they'll live buy, like the day traders do, they'll live trade. These guys will live buy an auction and explain to things. I've been watching those videos the past week. If you want information on how this business works, watch those videos. Okay, it'll give you an inside look, number one, to why so many dealers like ACV auctions. But number two, how the auction business works. The second thing is their auction and insurance business. They're up 52% year over year. They're continuing to make acquisitions. He was there this week at the event in Scottsdale. He also said it on the earnings call. They are going to be acquiring 2 more auction companies. So to give you the background of the company, I didn't set that up. That's my fault. The reason these guys are doing well is their auction process is very simple. Okay. Unlike ADESA or Manheim or Cox, and what I found out this week at this event, a lot of people in the industry, the used car business, they do not like Cox Automotive. They don't like them at all. They're like the big brother that's a bully. ACV Auctions makes it easy for the dealers. Instead of you shipping your car to Manheim, they come to your lot, they take pictures, they upload it to their site. It's all online. Okay, you save money on shipping fees. Their fees to sell the auction are less. And again, if these cars don't sell, you don't have to ship it back to your lot. Okay, this exploded during COVID, obviously, because of restrictions. And right now, that helped them to propel them to where they are now. Okay, and their numbers have started to speak for themselves. Again, they're still they're coming out of this phase. They weren't making a lot of money. I'll go to the chart here in a second, but they're starting to make money. They also had upward revision for 2025. They now expect $809 million in projections. They're expanding into new markets. Again, they have 2 planned acquisitions. This is all in the earnings call, by the way. And then the final thing that this week, I think it's going to benefit them as well. And again, talking to people at their booth, they also believe the same, that the tailwinds from the coming auto crisis are going to benefit them as well. Okay. The more repossessions come, the more stuff that has to go to auction, the more revenue for this company. Okay. And since they're taking market share away, and since they're working with, again, smaller dealerships, etc., and you go on YouTube, you can see this stuff and verify it on your own. It should help this company. Okay. So this is the stock chart on this. As far as the technicals go, look, I don't really have a lot to say on it. And this isn't like a technical play for us. I have a few things I will just say on it. It didn't really do well most of the years, trading in a range, and that's fine. Okay. Well, here's earnings. This is an earnings report. This is a gap up on this. And again, if you're on Spotify, you can't see this. They had earnings back in November. The stock gap from 17.50 to 19. The yearly high was like $21 a share. It went after the yearly high 4 or 5 days after earnings. It got rejected, pulled back, like, again, most double tops do. Again, you get the technical traders coming in, but if you understand the tailwinds, the technicals, again, take care of themselves. And it continues to break out. Now you're at 21.97 as of Friday's close. And again, we think this is going to continue to push higher. Okay. So that's the technicals on this. Take it how you will. I don't care about the technicals. For me, going back to this, this is a company that's innovative. Number one. Number two, revenues are growing. Number three, we think they're going to catch tailwinds from the industry in repossessions. Okay. So again, you can look at all of this on yourself. I put some information there for you. This is some of the data from the website. Revenue was up to 171 million from Q3, which was 119 million in 2023. It's increased. Revenue growth up 44%. Marketplace units they've sold 198,000. Their cash balance as of September 30th, $288 million. Long-term debt, 115 mil. Again, the only thing I don't like about this company, and you can't always, not everything's going to align, is their stock-based compensation's a bit high, but they're growing, and maybe, again, I'm keeping an eye on that. Okay, so this is a company we own, and yeah, that's what I learned this week. Good to hear the CEO speak, and I'll probably look at some other ideas as well. I can't give them away in this show, but I'll be looking at them for client portfolios for 2025. Okay, so that's it, this part of the show this week. Let's get into the final part of the show, into the Q&A section, and go through some Q&A like we always do every week. All right, so Q&A for this week. If you guys are readers of the report, you can send them in. Happy to answer them, even if you're not a reader of the report. I don't do day trading question Q&A. More about companies and investing. So the first one came through. Hey, Dan, nice call on HIMS. Last week, the show you said it would trade sideways. We actually put it a little bit higher. What are your thoughts on this particular name going forward? Final thought, why do you think it continues to move so much in these price movements? Manipulation or other? Okay, so on HIMS stock, we've been trading this for a while. I'll go through this quickly. Last week, I did say I thought it would trade in a range. We bought more leaps this week for portfolios. I want to own this stock. Again, not investment advice. Why do I think it moves like it does? I just think it's manipulated. Like, again, it's Wall Street. Let's just be blunt about it on the show. Manipulation happens. It's not fun, but once you understand that it happens, you know how to deal with it. Okay. So a few weeks ago in October, if you guys remember, this thing pulled back to like $15 a share on news that had nothing to do with HIMS, literally at all. It pulled back literally 2 days later, Friday after close, which is also suspect. They say they're going to add it to the S&P 600, and it rallies. Takes out the 2024 high. We get to $31 out of nowhere. We dropped back down to 19 because I think Bank of America downgraded it, and Amazon was talking about getting into the business, and it drops 20 or 25%, or I think 30% even at that point. Is it warranted? No. Why do I think it does it? I think it's manipulation and just standard market vol.